Good morning, folks. We're going to get started in a few seconds. And yes, of course, there are still seats up front. Welcome, folks, to our weekly update of preparing for COVID-19 recovery, loan options and forgiveness strategies. It's May 28th, 2020. A little bit overcast day today, but still a beautiful day. You should definitely get out. Maybe you might want to wear some rain gear. I don't know, but it is still a beautiful day. Well, I don't know what week this is in quarantine. I stopped counting, but you know, we have to always say in these webinars what you can't really completely rely upon, and that is we are not providing professional consulting, investment advice, accounting services, tax advice, legal advice. So this does not constitute any provision of thus. So you should consult your professional advisor and provide them with all the pertinent facts relative to your situation. Today's agenda. Well, today this is a packed webinar day because there's been so many good things that have come out. Obviously, we're doing the introduction right now. We're going to have some updates, some new SBA interim final rules. We're going to take a deeper dive into the PPP loan forgiveness application form, and then we're going to have, again, a lively discussion. This is your wonderful panel here. Todd, my speaker here, Josh, my partner Josh, my partner Steve, and we're all here to give you some excellent information. By the way, just so you know, in the future webinars, we will be providing CPE for those people who are CPAs and need it and want to request it. But and we will also have some exciting polling questions. So Josh, I know that you said that you have been giving up doing haircuts, of what you're up to $600 of savings for not having to do any haircuts, and I'm not sure how much in dry cleaning. So this has been an interesting time for us, and I'm going to turn the topic over to Steven. Steve, you're going to give us some updates. Go, Steve.
Yes, thank you, Todd. Hope everyone is doing well out there. And this last week, or this last Thursday in May, it's hard to believe we're almost at June in the calendar, but in any event, let's get started. So here again, you see just a recap of the HEROES Act, some of the PPP specific provisions. And again, this is not expected to pass the Senate nor the president. So you may be asking yourself, well, why are they telling me about something that probably isn't going to pass? The reason being is that there is bipartisan support, Republican and Democrat, House and Senate support to make some changes to the PPP program. And while the Senate is on recess this week, the House is in and is expected to vote on a bill to potentially extend the program, extend it to December 31st, lengthen the covered period, I believe, to either 16 or 24 weeks. It really is up in the air, and they may expand the eligible uses for funds, including the amounts eligible for forgiveness. There's also discussion about removing the 75-25 split in terms of payroll and non-payroll costs. So we know some people are getting into week 5 and week 6 potentially of the covered period in terms of the date of loan receipt. So we know things are coming to a head, but we are focused on it, and we hope to see some action, hopefully no later than next week. So in addition to these items, we just wanted to give you a quick update on Main Street for those borrowers who either didn't get PPP funding or are looking for additional funding. The launch date for Main Street is expected, it already is late May, so presumably in the next week or so, we will see this program launched as well. This being the 3 loan facilities that have minimum and maximum loan sizes, depending upon the program you want to enter, 4-year payoff, and interest based. These are true loans, LIBOR interest based, I should say. These are true loans. There is no forgiveness element. So something to keep in mind for those companies and those borrowers looking for additional funding. So as Todd had mentioned, the SBA is fast at work, and it seems to me that they issued this new information on Fridays. So thank you to the SBA for impacting our weekends, but it does give us time to look through some of the information. So we saw on May 22nd, 2 new interim rules released. And just as an overview, on Friday, the 22nd, so almost 2 weeks ago, the SBA released the loan forgiveness application form, which provided clarity on a number of open items and issues, but it still remained some open items and some items that needed to be clarified. So in response, the SBA issued 2 interim final rules just last Friday. And we're going to go through those. The first of the 2 is the PPP loan forgiveness interpretations. It clarified some items, reiterated some items, but also brought about some new information. And also a second interim final rule on loan review procedures and borrower and lender responsibilities. And we have heard from sources that there will be a number of additional interim final rules issued throughout this process to clarify some additional items. So for those of you who still have open questions, and I'm sure there's a lot, not to worry, the SBA and Treasury are acting to answer those questions. So just some items that were reiterated or repeated or clarified or covered again within the first of the 2 interim final rules. First of all, the covered period options, which allows either the traditional covered period, which starts the day of fund disbursement, or an alternative covered period, which would start the first day of the payroll cycle in the covered period. Now, there are some questions as to what that means in terms of companies that aren't indeed operating. When does their first payroll cycle start? So we're hoping to get some clarity on that. But this is something you want to look at to see how that would fit into your situation. And as we were reminded in the application, that payroll costs paid and payroll costs incurred are forgiveness eligible. Paid being basically when the cash is received or distributed. Incurred is generally on the date the pay is earned. And we see here that payroll costs incurred during the borrower's last pay period are eligible for forgiveness if paid on or before the next payroll day. So that gives you time to pay the payroll after the covered period ends and still have those payroll costs eligible for forgiveness. On top of payroll costs, non-payroll costs paid and incurred standard was repeated as well. These are forgiveness eligible. Paid, again, is paid during the covered period. Incurred, we're taking that to mean accrued during the covered period and paid on or before the next regular billing date. And if there happens to be a cutoff, you will need to do a pro rata analysis, but there's a pretty good example in the interim final rule, but also your advisors we can reach out, we can help you. Some other items, advanced payments of mortgage obligations. These are just basically prepayments, and you won't be able to prepay items, so you won't be able to stuff a whole bunch of payments into your covered period merely for the sake of going about forgiveness. We kind of say just business as usual, but there is opportunities so you don't have to do any sort of special payroll or any sort of special payments. The full-time equivalent computation as well as the hourly reduction was restated as well. This was clarified in the application in terms of FTA count, hourly requirements, it being 40 hours, as well as the comparative periods being the covered period versus either 2/15 to 6/30/19, 1/1/20 to 2/29/20, or the special 12-week rule for seasonal employers. So that is covered as well. The 25% salary and wage reduction for people who made over 100K in 2019 in any period, in any one period, that is stipulated as well and restated. Not restated, I should say covered again. I don't want to say restated, meaning they changed anything, just covered again. And then the June 30th date, it's still that magic date to restore FTE headcount and or salaries without negative forgiveness implications. But just keep in mind so that the June 30th date could theoretically come before your covered period is over. So keep that in mind as well. So this item here is something that's received a lot of information, a lot of commentary. These are the compensation caps for owners. So for owner employees, that being in the corporate setting, general partners and self-employed people, this basically you're limited to the lesser of 8/52 of your 2019 compensation, or 15,385, which is the 100K capitalized. So I'm sorry, annualized. So you're not going to be able to increase owner pay from 2019 to 2020 and include that in forgiveness. Now, here's something that's pretty interesting. Owner employees, and this being corporate shareholders who are also act as employees, are capped by the amount of their 2019 employee compensation and non-cash benefits, these being retirement and healthcare contributions. Whereas we see Schedule C filers and general partners are not allowed, at least the way we're reading it right now, these non-cash benefits are not allowed to be included within forgiveness. So there seems to be a disconnect here where corporate shareholders are receiving a larger benefit than that of their non-corporate counterparts. So we'll see if that gets changed, but for now, that's how the rules are being interpreted. Here's some other new information, and we'll cover some rehire stuff as well. But employees not performing work, payroll costs are incurred based on a schedule established by the borrower. Typically, this would be the day that each employee would have performed work. So it's something to keep in mind for employees that are being paid but currently aren't working. This was a big item too, furloughed employees as well as bonuses and hazard pay. These are now included as long as they don't exceed the 100K cap. These can be included in the forgiveness cap. So that's something that people were wondering about. Can they pay bonuses essentially to reward employees or kind of get their payroll costs up so they're more eligible for forgiveness, and you are indeed allowed. Here's something that was important as well, where situations in which a reduction in full-time equivalents and salary occurred, the 25% salary wage reduction only applies to the portion that's not attributable to the FTE reduction, to the equivalent reduction. So if you lower your FTE count, you're also not going to be doubly penalized by the fact that salaries of that person would naturally have been reduced. So that's something to keep in mind as well. And when Todd goes through the examples later on, that's something that you'll see covered in greater detail. Just some other information that was, again, recapped or stated over, but also a piece of information here that was clarified. This is for when in situations that you rehire or restore workers, provided you made a good faith written offer and the offer was rejected, that will not impact your loan forgiveness, nor will employees who were fired for cause, who voluntarily resigned, or who voluntarily requested and received a reduction in hours. These will not negatively impact your forgiveness, but the borrower, you as the borrower, are responsible to maintain these records, and we suggest you maintain extremely accurate records. We're going to see in a moment how long of a period you have to retain them and how long of a period the SBA has to look at your documentation. I apologize in the background if there's some noise. There's just something going on my computer, but hopefully it's not too distracting. But here's something that was also stipulated in the guidance. To avoid the negative implications references above, the borrowers are also required to inform the applicable state unemployment agency within 30 days of the rejected offer. So the SBA is going to issue new guidance on how exactly to do that, but there's another step that is required for borrowers to go through to document why their forgiveness shouldn't be negatively impacted in these types of situations. So as we said, there were two rules. That was the first of the two. This is the second. This is the rule surrounding the loan procedures, the procedures the SBA will undertake to review loans, as well as borrower and lender responsibilities. And just to recap, the SBA will review all loans with principal amounts, original principal amounts in excess of $2 million that was stipulated in FAQ 39. Loans below this threshold may be reviewed as well. So while we did see that there is a safe harbor for borrowers, these loans below the $2 million threshold could be reviewed as well. The lenders have 60 days after the borrower submits the forgiveness application, and Josh is going to talk about the pros and cons in terms of timing of the submission. But the lenders have 60 days after the borrower submits to determine if the loan forgiveness is approved. And the SBA, if they end up reviewing the loan, they have 90 days after that. And at that time, the idle advance, this is up to the $10,000 grant, will be deducted from the forgiveness amount. So as you recall, the borrower certifications, there were a slew of FAQs issued by the SBA to cover this topic. We've covered them on our prior webcast, but the first one here, the good faith certification surrounding the need to use the funds, that has received a lot of press, and we saw a lot of back and forth for this. But also, borrowers are required to certify on how the funds will be used in terms of worker retention and payroll maintenance, as well as these non-payroll costs. And there's other certifications here as well in terms of duplication of the PPP application. So these were certifications that were required. On the next slide, we talk about the other borrower certifications. Basically, the borrowers had until May 18th to return the funds. That date has since passed. But if the SBA determines that the borrower did not meet the good faith certification, the SBA will seek repayment and the loan will not be eligible for forgiveness. So that's just something to keep in mind as we look out to the future. Once the submission of the forgiveness application is committed, this is the timeline. The SBA, interesting point made here, the SBA will review borrower eligibility based upon the time the application was submitted. So this, for example, there was an interim final rule issued around on May 18th that said, for aggregation purposes, the 500 employee head count threshold, if that was met in an application prior to May 5th, but the borrower did not include both their U.S. and foreign affiliates when counting the head count, that they won't be negatively penalized. So again, you really want to keep good documentation in hand in terms of when you apply, just to make sure that your timeline fits. And as it says here, the SBA may undertake a review at any time. So we'll see that the SBA, in future slides, we're going to talk about how long you have to retain your documentation and how long of a timeline that really can be. So something to keep in mind as well. Here are some of the areas that the SBA will look at, not limited to enterprise eligibility and affiliations, the certifications and representations, as well as the forms to the loan amount and the forgiveness amount, the use of proceeds, loan calcs, and overall just eligibility for forgiveness. So these are just some of the areas that the SBA is going to be potentially focusing on, but I have a feeling as additional guidance comes out, we may see some additional items added to that. And as I was referring to before, borrowers are required to maintain documentation for 6 years following the date of forgiveness or full loan repayment. And if you think about that, if you have up to 2 years to repay the loan, and then they had 6 years after that, you're talking about an 8-year window to maintain this documentation. So that's something to keep in mind as you are putting this information together, but borrowers will be given the opportunity to respond to SBA questions and inquiries surrounding the loan process review. So it won't be a one-sided affair here. You will be given an opportunity if your loan is rejected, and it could be a partial rejection, partial or a full denial. We'll see. Hopefully we'll think positive here and everyone's loans will be given, but we know that that may not be the case. So as we said, the borrowers will be given an appeal opportunity. We can expect a separate interim final rule on that. But for all you lenders out there, your fees may be impacted in situations where the loan amounts and or the forgiveness amounts are impacted or reduced. And in addition to lender fees, some other responsibilities, while lenders are not required to independently verify borrower information, they are required to timely certify in good faith the receipt of the borrower certification, receipt of documentation supporting payroll and non-payroll costs, and calculations on the loan forgiveness application, which Todd is going to touch upon again in greater detail. But here's something that's important. The lenders and the borrowers will be working together. So all of us, including your representatives, will team with you and hopefully be able to resolve any issues that arise should a review of your loan take place. So with that said, I'm going to turn the program over to Todd to go over some of the, I'm sorry, I'm going to turn over to Josh to go over some of the open items. Take it away, Josh.
Thanks, Steve. I won't hold that against you that you forgot about me. But before we pass the baton to Todd to take us through a couple of examples, we're just gonna kind of reiterate some of the following questions that are still unclear. As Todd does go through the examples, he's going to try his best to point out on the form where these questions are certainly applicable. But the first one is, will the 8-week period be extended? As Steve mentioned from the onset that the House is expected to vote this week. All indications is that it looks like the period will be extended. However, again, we still advise that until those final rules have come down, that you treat it as an 8-week period. Had an interesting discussion yesterday with the task force regarding question number 2. What if you're a restaurant who has been closed and has not opened to this point? Are you able to push your 8-week period out to when you make that first payroll? So for enterprises that are closed and not making payroll costs, does the alternative covered payroll period start with the date the first payroll payment is made? And again, here we're talking about delaying the 8-week period. Also, too, how does the paid and incurred standard impact retirement benefit forgiveness? We finally got some clarification with respect to bonuses and hazard pay, but still nothing with respect to retirement benefits. We're still getting a lot of questions about making 2019, 2020 profit sharing contributions and how that affects the calculation. Are corporate shareholders who also are employees allowed to include non-cash benefits in forgiveness requests where partners and other self-employed individuals are expressly forbidden? Steve mentioned before, there's definitely a disconnect between the two. So for those of you who are currently corporate shareholders, you're definitely in the driver's seat as compared to the other folks. We still don't know, will the expenses be deductible for tax purposes? We know the loan forgiveness is considered a tax-free event, but they also said that those expenses used to offset the loan are currently not deductible. We're hoping for them to flip the switch on that, but to this point, we don't know. We also still don't know how the state taxing jurisdictions will treat the forgiveness. Again, we only know about Fed. Will the 75-25 payroll cost, non-payroll cost ratio be eliminated or revised? Again, we think so, but nothing concrete at this point. We're also hoping that more costs will be eligible for forgiveness than what's currently included in non-payroll costs. Had a lot of conversations with folks over the last couple weeks concerned about their ability to meet the non-payroll cost number. We get some clarity when the application first came out regarding the inclusion of personal property with respect to mortgage interest. That was a big help, and that leads me to the next point. So we still don't know what the definition of a transportation utility includes. However, maybe there is some hope that if we're able to use car leases and car notes, we would be able to include the cost of the gas as well. So again, maybe that's just me being optimistic, but it's still wait and see. What is the impact to forgiveness for individuals out on disability, paid sick leave, or the Family Leave Act? Are these wages excluded from forgiveness? If so, are the employees included from down as well? We do believe that that's the case, is it can't be one or the other. However, nothing particularly concrete on there. There be a separate application for employers. We had an interesting question come through the website the other day regarding someone who is a seasonal employer and does not employ employees during the measurement dates on the application. Really interesting question. Certainly, I would assume there will be more there. And I always like to ask, how many more times will this application change prior to being submitted? Steve mentioned that, they're out there of another, batch of FAQs coming. So with that, I'm sure the application will change as well. We have collected a lot of good questions that we're going to talk about at the end. But before we get to that, I'm going to pass it over to Todd, who's going to take us through some examples.
Hey, thanks, Josh. So there's actually 3 scenarios that we want to cover with you today. And I'm going to be pointing out specific things. The first is just a regular app that doesn't have the salary reduction or the FTE reduction, and then one for the salary reduction, one for the FTE. So here you have the loan forgiveness calculation form. You can see that you're putting down your business legal name. I don't know where Loan Forgiveness USA is, but thank you, Matt Goldstein, for finding that for us. Matt helped put together this presentation. You're going to put down your SBA number, the lender number, and the loan amount. And note the PPP loan disbursement date is a key date for measurement. That's May 1st, 2020 in this example. They want to know the employees at the time of the loan application and the employees at the time of the forgiveness application. And if you did receive an idle advance amount, that needs to be included there. In this particular example, there's 0 because that advance is going to reduce your forgiveness amount. So the payroll schedule, as Josh mentioned, you could see that you need to note what is your frequency in paying your employees. The covered period, that may change, folks, if indeed they extend the period of time, but in this particular case, it is the 8 weeks. And in this particular example, we are following the date in which they received the proceeds from the loan, which is May 1st, 2020 through June 26, 2020. At any rate, it's 56 days. We're not using the alternative payroll covered period in this example. And in this example, since it's only $200,000, you don't need to check the box for the $2 million, which is the infamous box in which alerts the SBA that they're coming to audit you. So payroll costs is in line 1, and you'll see how that flows. $129,234. Line 2 is the business mortgage interest payments of $2,000, business rent or lease payments of $30,000, and then business utility payments of $3,000. And as Josh pointed out, we still don't know what a utility, a transportation utility is, but hopefully we'll get some further clarification. In this example, we are not showing the wage reduction. We'll show that in the next one. So line 5 is 0. So you're adding up all those items, the payroll cost plus the business mortgage, business rent, and utilities, coming to $164,233. In this particular case, we're also showing no disparity in the FTE reduction, so it's 1. We'll show an example where that's different. So line 8 is your modified total, which is line 6, multiply line 6 by line 7, which is $164,233. You could see the PPP loan amount was $200,000. And then you have that lovely line 10, which is really showing that you're kind of limited to 75% of your payroll costs. So that's line 1, your payroll cost divided by 0.75, which is $172,312. And there, folks, if they do change the rules and that 75% requirement is removed, I would think you're going to see that line 10 change or be eliminated. But you get to pick the lowest of those 3 numbers, and in our case, it's the modified total amount, which is actually the amount that we spent of $164,233. Now, going through this part, the next part is the certification, which I do want to go through a little bit. We're not going to go through it in the other examples. Here are the things that you must certify. First, you're certifying that the dollar amount for which forgiveness is requested was really used for the pay costs that are eligible for forgiveness, as well as the business mortgage interest, business rent, utilities. and that you included all the applicable reductions due to the decrease in a number of full-time equivalents and salary hourly wage reductions, and that this amount does not include non-payroll costs in excess of 25%. Again, that may change. And it does not exceed 8 weeks worth of 2019 compensation for owner-employed or self-employed individual or general partner, which is capped at $15,385. That's the magic number, 15,385. Also, you're certifying that you understand that the funds, if you knowingly used them for unauthorized purposes, the federal government will pursue recovery of loan amounts, and you may end up dressed in orange or maybe stripes. I think it's orange. And then also that you've accurately verified the payments for the eligible payroll and non-payroll costs for which you're requesting forgiveness. You're not just throwing the numbers on the form. And that you are also submitting to the lender all the required documentation to verify these costs. And also, the next section is that the information provided in this application, you understand that the supporting documents and forms are true and correct in all material respects, and if they are false, well then, imprisonment of not more than 5 years, a fine of $250,000. I think you get the point that you really are putting your name on the line when you're doing this certification. You're also certifying that the tax documents you submitted to the lender are consistent with those that the borrower submitted and will submit to the IRS and the state tax or workforce agency, and that you understand and agree that the lender can share the information with the SBA's authorized representatives, and also the SBA, the Officer of Inspector General, et cetera, et cetera. You also understand and acknowledge and agree that the SBA may request additional information for the purposes of evaluating the borrower's eligibility for the PPP loan and for loan forgiveness, and that the borrower's failure to provide information requested by the SBA may result in a determination that the borrower was ineligible for the PPP loan or a denial of the PPP loan forgiveness application. So you're going to certify all that information. You notice it was Tom PPP. He didn't sign the form. As we continue down, you'll see that this next schedule is Schedule A, which is actually going to be information is going to flow up from your worksheet, your tables. But let's just take a look at this. Line 1 is your cash compensation from this table. There's 2 tables. One table for those people who had salaries under 100,000 and those who had over 100,000. You're putting down the cash compensation for the first table, which is 60,417. The average FTE was 5, and we're not showing any salary wage reduction in this particular example. Table 2, which is the next line, line 4, is the cash compensation for those individuals who had salaries in excess of $100,000. That's 61,540, and there's the FTE of 4. Notice there's no wage reduction associated at all with that particular category. You're also putting down the total amount paid by the borrower for employer contributions for employee health insurance, $3,715. Total amount paid by the employer for employer contributions to the employee retirement plans, $3,000, and that's where we still have questions as to what you can put down in the employee retirement plans. Can you advance or pay back retirement plan monies? Unknown. And also the amount paid by the borrower for employer state and local taxes assessed on the employee's comp, $562. In our example on line 6, we are not showing anything associated with compensation to owners. They are capped and limited. We will show that in future webinars, so stay tuned. Line 10 is the total payroll costs, $129,234. And in this example, we are going to basically stay in the safe harbor when it comes to the FTE reduction, which actually, if you're in safe harbor, it's 1. We'll show the example where you actually are not in safe harbor in in the next, actually the last scenario. Okay, this worksheet, which is worksheet A, as we continue down here, we are going to scroll through, and you can see we're going to talk about the salary hourly wage reduction in the next scenario. So as we continue going through this, scrolling down. Okay, scrolling down. We're going to come now to the wonderful worksheet. By the way, folks, the PPP Schedule A and the worksheet, actually the calculation for forgiveness, those are the two that you actually submit to your lender. This is really for your purpose. You can see here that they want you to actually list out each employee. That's why you have employee 1 through 5. In this first example, which relates to those who have annual salaries under 100,000 or equal to 100,000, you're going to put down what their compensation was for that 8-week period, and also their average FTE, and also whether or not there was any type of salary or hourly wage reduction, which we'll show you in a future scenario. And then for the next section, these are the employees who received an amount of more than $100,000, and you can see that they're capped at $15,385, which is the most that you can get, and their average FTE was 1. So these, in this particular scenario, you are falling into the safe harbor for FTEs. As you can see, the calculation going down to the very end of this slide. So that's kind of the slide that's no reduction in salary, no reduction in FTE. Man, that's a good scenario to have. Let's take a look at the one that relates to the salary reduction. Okay, I'm not going to cover the first part of this, except to say that it's the same. But what you're going to see as we're going through the payroll and non-payroll costs, as you get down to line 5, you see that there is a salary / hourly wage reduction of $1,000. I'm going to show you how we came up with that in a little bit, but you could see that that is going to reduce, as you total the numbers down on line 6, $157,067, because you've been impacted by that salary / hourly wage reduction. So your potential forgiveness amounts, your modified amount is now $157,067. Your loan balance is $200,000, and then when you're doing the payroll cost to show that you spent at least 75% of it, that's $164,089, and yet you only spent $157,067 after that wage reduction, so that's the amount that will be forgivable. Okay, we passed over the certification piece. Let's take a look at Schedule A, which you will be submitting to your lender. Again, your cash compensation was $54,250. There's 5 FTEs. $1,000 is the reduction, and that is for table 1. And the next situation, which is those people who made greater than $100,000, that's $61,540 for FTEs. You can see there's no salary reduction actually pertaining to those individuals because they're excluded based upon the SBA's guidance. Total amount paid by the employer for employer contributions to healthcare, that's the same as it was before, $3,750, $15. Amounts contributed to the retirement plans, $3,000, and also the employer, state, and local taxes assessed on employee compensation, $562. Again, we're not showing anything for compensation to owners. So your payroll costs here are $123,067. In this example, you're in a safe harbor for FTE, which is 1. And now let's kind of take a look at how we came up with these numbers. In this particular example, we have 2 different individuals that are going to total the $1,000. So I'm going to walk through both with you. You're going to follow the steps here. First step, you're going to enter the average annual salary or hourly wage for the covered period. For this particular individual, it was $11,000, and yet you can see that their average annual salary or hourly wage between January 1st, 2020 and March 31st was $15,000. So when you divide those two, that's 0.73. So that's actually not more than or equal to 0.75. So you keep going. On step 2, you see that the annual salary or hourly wage is $15,000. That it was as of February 15th. And then the amount for February 15th, 2020 through April 26th is $15,000. Therefore, it's equal to or greater than 2.A. We're going to take a look at step 3, in which you're multiplying the amount in line 1B, which is 1B was multiplied by 0.75. It's 11,250. You're going to subtract the amount entered in line 1A from 3A, and you're going to come up to the $250 and keep going down. So now they're not hourly, they are actually salaried. So this step E applies. You multiply the amount entered in 3B by 8, okay, 8 periods. That gives you $2,000. Divide the amount by 52. That gives you $38.46. Okay, we're going to continue with another example of a different employee so you can see how this flows. So the next employee in the example, that employee under the covered period had $5,000 as their average annual salary, and their average annual salary from January 1st, 2020 through March 31st, 2020 was $15,000. So you can see a big drop there. So when you divide the value of 1A by 1B, it's 0.33. We go down to step 2, which is to see whether or not you meet the safe harbor. In this particular case, February 15th, 2020, the annual salary is $15,000. And then also February 15th, 2020 and April 26th, 2020, it's $15,000. So if 2B is equal to or equal to 2A, skip to step 3, go to step 3. You multiply the amount on 1A by 1B by 0.75, you come up with $11,250. You subtract the amount entered in line 1A from 3A, $6,250. And again, this is a salaried person, not an hourly person. So you're going to drop down to E, and you're going to multiply the amount in 3B by 8. Again, there's 8 weeks, 8 periods. That's $50,000. And you're going to divide this amount by 52, giving you $961.54. So these are 2 specific employees. So let's take a look at the worksheet, which brings it all together wonderfully. And you can see here that for employee 1, that amount was $961.54. In employee 2, it was $38.46. When you add those numbers together, it's $1,000. So that's how you got the $1,000 wage reduction. And of course, the next table does not have a wage reduction. It does not apply to people whose annualized rate was more than $100,000. Okay, and now we're going to go to the last scenario, which is the FTE reduction. You're going to see in the FTE reduction, they made it so that you would not be harmed twice. If you have an FTE reduction, you're not also impacted by a salary reduction. So again, pretty much the same information that we had before. As we're scrolling through, you can see now in this particular case, payroll costs $129,234, $2,000 for business mortgage interest, $30,000 for business rent, $3,000 for business utility payments, and no wage reduction. Okay, no wage reduction. You can see you're adding the totals together. It comes out to $164,233, but me, oh me, oh my, you look at line 7, and there is an FTE reduction quotient of 0.89. So when you multiply that number out, your modified total is now $146,167. The PPP loan amount is $200,000, and of course, when you're doing the cap for payroll costs, it's $172,312. You pick the lowest of the three, which is $146,167. Okay, so we're going to take a look now at the FTE reduction, folks, and you can see in our first case, the FTE was 4 for that first group. In the second group, the FTE was 4. And again, the compensations are the same. The amount that was paid to the borrower for contributions to employee health, 3,715, 3,562. So your payroll cost is 129,234. And then, whoa, look at this. Your full-time equivalents, your average FTE during the borrower's chosen reference period, remember you get to choose, that was 9. But when you take a total of your FTEs, your average total that you can see a little bit later, the next screen or so, it's 8. So that means your quotient, your FTE reduction quotient is 0.89. Okay, so here you have the worksheet, and you can see here we're showing again the cash comp. The average FTE totals 4. Just note that, again, you're not going to be double dinged if you have a reduction due to FTE. You can see here that the salary hourly wage is 0. So again, the FTEs are 4 for the first category, and they are also 4 in the second category. So there's obviously a decrease. You can also see as we're going down here, if you're calculating the safe harbor rules, the sum across all employees for that first period was 9. The FTEs for the pay period for February 15th, 2020 is 9. And yet, if you're looking at step 4, the FTE for June 30th, 2020 was 8. So you didn't recover those folks who you let go, and therefore you're not falling into the safe harbor. So those are 3 examples. Just want to let you know, folks, these are very complex. Well, they seem simple at first, but really there are a lot of questions still that need to be answered. And also, you will probably need some assistance. Please talk to your professional advisor, and feel free to reach out to us at COVID-19@sacsllp.com. If you're looking for some help with these applications or questions, we're here to help you. So now I'm going to turn it over to Josh, who's going to tell us a little bit more about what do you need to document. Josh, your 3 favorite words. Document. Tell us, please.
Thanks, Todd. You know it. I love to document. So, as Steve mentioned before, so borrowers are required to maintain the documentation for 6 years after the date either the loan is forgiven or it's been repaid in full. So remember, if you do take the 2 years to repay a portion of it, it would be at the conclusion of that 2-year period, your 6-year window starts. So potentially, 8 years on the back end. The SBA and the Office of the Inspector General must be allowed to access the documents upon request, which is, again, why, we want to make sure you have all your ducks in a row here. With respect to payroll, again, keeping documentation of eligible cash and non-cash compensation amounts. Those are usually supported by bank statements, third-party payroll service provider reports. And just to speak to that for a second, for those of you who have been involved in the process, the payroll companies have all designed CARES Act reports for you to be able to provide in the event it's needed. So certainly use those resources. And again, your applicable payroll tax filings, your 941s, and support for employer contributions to health insurance and retirement plans, again, in the form of policies, canceled checks, invoices for non-payroll documentation verifying your pre-February 15, 20 lease and/or utility and/or mortgage obligations. Things that would support that would be amortization schedules, certainly, lease agreements, bank statements, canceled checks for payments of invoices, things of that nature. Documentation surrounding your average number of FTEs for the specified periods. And again, if you're a seasonal employer, it's just any consecutive 12-week period between May 1st, 2019 and September 15, 2019. And then while not required for submission, the borrowers must also maintain the following records. So your employee by employee documentation for amounts included in the payroll cost, documentation regarding the employee separation events, including the job offers and the refusals. Remember, that does impact unemployment for certain employees. And again, for our purposes and for the borrower's purposes, you want to be able to maximize as much forgiveness as you can. So that's really going to be very critical. I'm interested to see how much focus is put on that. Documentation regarding firings for cause, if employees voluntarily resign, and written requests by employees for work schedule reductions. So verbal, a lot of times we go verbal between the boss and the employee. Anything surrounding, the use of PPP funds, especially with employees, you certainly want to have it in writing. And then documentation supporting the FTE reduction, safe harbor. Also, too, there is optional PPP borrower demographic information forms. The completion or not completion has no bearing on forgiveness, but just another piece of paper out there. So open discussion time. So want to go over with you some things that have come up, questions, and here we go. So first one I want to make a point to say is regarding line of credit interest. We mentioned it during the webinar last week. Just want to clarify. So with respect to line of credit interest, it's our understanding that it is an allowable use of PPP funds. However, those payments for line of credit interest are not eligible for forgiveness. So understand the distinction between the two. It's allowed to be used, but not eligible for forgiveness. For those of you still applying or receiving money for the EIDL, we do know it's been reduced to $150,000 cap. And for those of you going through the process, the application process, they are including, they are expecting you to collateralize the loan with assets of the company or personal guarantees. If you do remember all the way back several months ago at this point, when you applied for an EIDL, if your loan amount was under $200,000, you didn't have to include any kind of guarantee. So they have certainly flipped the switch on that. There still is time to get the PPP money. If you've kind of sat back and waited and for this all to play out, as we mentioned last week, there was 18 billion returned, and there's still, to our knowledge, over 100 billion in the program. So if you haven't applied yet, there still is an opportunity to get money. We had an interesting discussion yesterday. So surrounding this next topic, what if you applied for the money, you received the money, and then with all the interim guidance and all the FAQs, you got scared and you returned the money? Well, now facts and circumstances change. Are you able to apply again? I think as long as the prior loan is closed and you could substantiate why you need the money, then there may not be any issue with you reapplying for the money. Just want to reemphasize, there is no double dipping. If you have the PPP money, you are not eligible for the employer retention credit. Just kind of keep that in the back of your minds. There is an open question with respect to Schedule C employees. regarding compensation amounts, the payroll, non-payroll cost allocation. As Steve mentioned before, so if you're a $100,000 Schedule C and you receive $20,833 and you're only allowed to allocate 8/52 of that money to payroll, it actually puts you below 75%. So the math doesn't work. So we're hoping that they will fix that calculation. Todd had brought up an interesting point, and we're going to touch on it now. Is it beneficial to request forgiveness immediately after the 8-week period is over, or wait? And we had an interesting discussion again about this yesterday. So if you apply immediately, you certainly have the ability to capitalize on any remaining uncertainty that's in place with respect to treatment of items. So right as the longer the period goes on, the more information becomes available. And the other thing I don't know that we're all thinking about, so when the 8-week period is over, theoretically the bank has 60 days to push forward their ruling. And then the SBA has 90 days on top of that. So if we push it the full 60, we push it the full 90, plus the 8-week period from when we got the money, we're actually beyond the 6-month time period as to where the loan was, to where you have to start repaying the loan. So we could be in a position, where you're paying the loan back, and then a ruling is coming with respect to forgiveness. So whether or not that'll happen, we're not sure. But again, if you just look at the max days, there is a possibility where you're in a position where you're still waiting to hear for forgiveness, and you start to repay the loan, and then the SBA may cut you a check back. So those might be, if you want to call it a pro. Why wait longer? So one of the reasons is that you can continue to defer the employer portion of the Social Security, right? It only ends at the time forgiveness is ruled on. We're continuing to wait for more guidance, and it gives you an opportunity to have a better handle on the documentation. One of the other cons of waiting for so long is that if you're subject to the 60 days and then the 90 days, it could push you beyond your tax year. So again, I think that's one of the challenges with this, is how is it going to be handled for tax purposes? Certainly, I would think we'd want to get it all settled within the 2020 tax year. So those are the open discussion points as of today. Just another weird thing is if you do select the alternate covered period, which falls under the paid incurred standards, is it possible that you could have more than 8 weeks of payroll? Certainly still capped at the $15,385 per person, but will they give more guidance with respect to that? So with that being said, we want to thank everybody for attending today. We will see you next Thursday, June 4th at 10 a.m. As Todd and Steve both mentioned, if you have additional questions, please send them through. You can email them to covid19@sacsllp.com. We continue to enhance our resource center on the website. There's a lot of good information there. And with that, we say be healthy, be safe, and we'll see you back next week. Thanks, everybody. Take care.